Hello traders and welcome to another video review. Today is Thursday, February 27th, 2025. Let's take a look what do we have in the economic calendar for today. So during the Asian session we got the release of the business confidence. ANZ business confidence from the New Zealand apparently beats the expectations of the previous number of 54.4 with 58.4. So business confidence increases in New Zealand, and private new capital expenditure in Australia decreases from 1.6% to minus 0.2%. Something slightly different is going on with Australia according to the data. We still wait for the GDP data from Switzerland, scheduled for this at 9 o'clock. Spanish CPI, scheduled for this at 9 o'clock. Polish GDP, scheduled for this at 10 o'clock. And then we got the start of the US session. ECB publishes accounts of monetary policy meeting at 1:30. Then we have the data from the USA at 2:30. We got core durable good orders, GDP, and initial jobless claims. Then we have the pending home sales at 4 o'clock, and two speeches from FOMC member Bowman at 5:45 and FOMC member Harker at 9:15. At the end of the day, at the end of the session, we got Fed's balance sheet scheduled for release at 10:30. So the US session is way more interesting in terms of data release than the London session. Core durable good orders, GDP, and initial jobless claims together with the pending home sales might get this session very, very interesting. Now, when we know what the economic calendar is, without any further ado, let's just switch to the technical part of the review. Euro-dollar 4-hour chart has been seen very, very interesting in terms of the price action, because the recent developments to the upside has been again rather bearish, as the wave A top was established at 1.0529. we got two more attempts apparently here inside of the supply zone made by the bulls that were basically unfortunate, and the bears managed to push the prices lower. As you can see, we are below the trend line. Okay, we are below the lower orange line on this chart. We are still above the wave B low eventually. Okay, so even if we place wave B low here, so it's still something like this. But as you can see, we might have the situation when the ABC to the upside had been completed. We might have been completed this movement here. Very, very short ABC movement to the upside, some kind of a distribution pattern. The bears are making pressure on the bulls as they push the price lower. Momentum is now below the level of 46 points only right now, so the bears are in charge of this market. At least in the short term, we are below the lower channel line, and the bears are getting ready to test the level of 1.0450, and a breakout lower would likely expose the 100 periods moving average for a test, 1.0428, and even the wave X low at 1.040. So as long as we are below the supply zone, the outlook remains bearish on euro-dollar. Because of the data from the USA, let's take a look at the US dollar to the Japanese yen, and we still testing the key level on the daily time frame chart. This key level is of course 148.61. This is the technical support, very important technical support, because any breakout lower would likely expose the level of 142 for a test, and that's 600 pips away. So this free wave movement to the upside that ended at the level of 158.89 had been completed, and now this new swing to the downside started. Well, it started in the January 10th, but the previous one started in September, so this is at least a 5-6 months movement to the upside. Now we got two more, yeah, not even 2 months. It's like 8 weeks. Not even 8 weeks, 7 weeks long movement to the downside. So very important situation here on the US dollar to the Japanese yen. It's worth to keep an eye on it. But let's take a look at the whole. Oh no, That's the wrong chart. Whole US dollar index. There you go. This is the US dollar index daily time frame chart. Please notice very interesting candlestick pattern at the end of this movement to the upside. Again, this is the end of the September. This is the middle of the January 13, 2025. Well, we don't have any more data here on the daily time frame chart. Let me just take a look here. There you go. This is 26th of the February, so maybe we will take a look at the 4-hour chart because we got data here. After the gap was filled and we went lower and lower and lower, so we are still below the trend line. So we got two basically trend lines. This is the first one, the blue one, right? We can place it like here, and there is is obviously a second one from this high. It's much more steeper. Oh, there you go. So I can make it like a black. So the black trend line is still being tested. Right now we got some kind of a slight breakout to the upside, as you can see. But this is only temporary breakout because there is some sort of that technical level here. To be honest with you, it's a technical resistance. Just recently has been violated. So let's just adjust our technical resistance level to the nearest newest data. So that's it, 106.60, 106.70. That's the technical resistance, and the technical support, it's obviously located here at the level of 106.10. I think, yes, 106.10 should be good. So this is the technical support. Now the market is trying to break above the level of 106.70. Momentum is okay. Momentum is quite positive, 51 points on it. So it's more neutral than positive, but it's bouncing from the extremely oversold conditions anyway. So we should see nice development here on the US dollar index soon. So please keep an eye on this current situation on the US dollar index. We are waiting for a breakout to the upside or another reversal. And last but not least, let's take a look at the Bitcoin. Massive sale on the Bitcoin just happened. We got the breakout below this level that I've been talking about many times. That used to be the level of the technical support, and the zone was called a demand zone. Now, after the breakout, this is the technical resistance, and of course, this is the supply zone. We hit the extremely oversold conditions on the daily time frame chart, so this movement to the downside might be temporarily paused as we make some kind of a pullback higher, preferably towards the $90,000, 91 even $1,000, where the supply zone is, and then the downside movement should be continued. Only a sustained breakout above this the trend line might be more bullish, but breakout above the trend line must of course be followed by the breakout above the 100 periods moving average, which is right now at the level of 97,853, and it's starting to reverse lower as well. So we might clearly say that when there will be situation in which, let me just grab my arrow, there you go, in which we will have the test of this supply zone, right? And after the test of this supply zone, there is no follow through towards the 100 periods moving average, then we might say that the whole situation is bullish, is bearish, and we should expect lower levels to come very soon. All right, so that might be the other scenario. So it all depends how the market will behave during the test of the supply zone. Any hesitation and increased bearish activity means that we will see lower levels pretty soon on the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.